Mayfield is Baird's investment strategist. Baird has more than $500 billion in assets under management. Ross, at the start of the conflict, President Trump said it would last 4 weeks. Since then, he's declined to give a new timeline. What do you think is the main focus for the markets, the Fed or the war's end, or something else?
Well, I think of the two, it's definitely the war's end. I mean, this oil shock has the potential to seep through to consumer spending. You mentioned gas prices. The Fed, unless they really change course, this might kick a rate cut out into the future. It might take one off the table. But that's not meaningful to markets compared to what an oil shock of this nature could do. So I think it's all eyes on Iran, all eyes on the Strait of Hormuz. And I hope that 4-week time horizon is still accurate.
Okay. Well, energy since the U.S.-Israel war began on Iran, we can see, obviously, has gone higher. Thankfully, today, for those who consume a lot of this energy, those prices are coming down. Give me a sense, though, where you start to see areas that might be oversold that now look really ripe for the picking. Because, again, we saw the market sell off over the past 2 weeks.
Yeah, well, you mentioned it earlier. The resilience of the U.S. market, to me, says there is a lot under the surface to like. There are still bulls that if this Iran conflict gets resolved in a timely fashion, there are a lot of tailwinds for the market. And so we like, oversold cyclicals like industrials. We like a lot of the tailwinds that come from the One Big Beautiful Bill, from the reshoring plan. There's aerospace and defense spending in that sector. So there's a lot of diversity in the sector that lends itself to active management. It's oversold in a big uptrend. It's been one of the winners of the last couple of years. So I think you can really start to look for opportunities in that sector because this cyclical boom in the U.S. still has legs if we can just get the oil prices back to a level that's reasonable.
Can I just push you? So here we're looking at the XLI, the Spider Financial, the industrial ETF there. And you can see on the far right hand, yes, definitely oversold. However, when you look at individual names, say, for example, the machinery and construction part, which I believe you also like beyond defense, Caterpillar's up something like 22% year to date. I mean, that is not oversold. That's a beautiful chart, is it not? So you got to pick and choose some of these, right?
Yeah, absolutely. I mean, it depends on what kind of investor you are. Are you deep value? Are you looking for the stuff that's been really beaten down? Or do you like to ride the momentum wave of some of those names that look really good, great charts, and are participating in not just reshoring and some of the more cyclical sectors of, construction and machinery, but are big beneficiaries from the AI build out as well. So this is a multi-leg thesis. This has, years to play out. But these names are really reflecting, what we see in the domestic economy. And I think the PMIs, the manufacturing PMIs, are the first place to look for a sign that something is changing underneath the surface. And this is not just an AI-driven market anymore, but some of these kind of real economy names can participate and have real upside.
I'm looking at the sector picture here, and it looks like a broad-based rally today. Everything appears to be higher. I'm just going to double-check this. But at the moment, consumer discretionary, information technology, communication services, rather. Number 4, industrials. And then bringing up the rear, consumer staples, utilities, energy, non-cyclicals. Not bad. Not bad at all. So this kind of gives people a perspective of how much people are jumping into the market, at least today. I mean, there could be another spooky moment because this war is still happening. What do you avoid at this point?
Well, I think you want to avoid getting too defensive because I do think that if we've seen one thing over the last year or so, or really the last 10 years, it's that you can really get caught off sides if you're too defensive when something in the market shifts. So if you were getting very defensive in April 2025, all of a sudden the market flips, sentiment flips, and you're left behind. So something like Staples to us, which has not really offered a ton of upside throughout this weakness and is lagging on a big risk on day like today, I want to avoid. So things like Staples, I think there's opportunity in utilities and healthcare, some of the slightly defensive yield proxy names. But you look at Staples, they've lagged, they don't have a ton of growth. And if we are, getting back into bull market mode, it's the last place we want to be.
Okay, and I just want to ask you, because technology is still a very interesting trade. It, too, has been sold off depending on the week you're looking at. NVIDIA right now doubling. We're going to get you a whole bunch of information, folks, on what is happening at the GTC NVIDIA conference, because Jensen Huang is making a lot of news. But the Spider Technology XLK up 2 full percentage points. We showed you ARM earlier. ARM is up 6%. ARM, of course, is the chip design company. So these are the big leaders. Do you like these names in technology, or are you done with them for the moment?
No, absolutely. I mean, there's tons of momentum with the chips and memory names, so we love that. And I even think for investors with a long enough time horizon, I would be legging into software. I mean, the charts are beaten up, so it might take some time to consolidate and really get some upside. I think the software sell-off is way overdone. I don't buy that we're replacing all of these enterprise software names with vibe-coded apps overnight. I think there's tons of opportunity there if you can have the patience to let the names consolidate, let the charts rebuild themselves. I think this AI bull market has plenty of room to run.
That's nice to hear. We like to hear that. Let's hope it's true. Good to see you, Ross. Thank you.